Good morning. If anybody's joining, it is Monday, February 5th. Monday, February 5th. It's Monday, February 5th. There we are. We're live. I'm going to turn on Do Not Disturb. And live. Oh, and I got to close this. Monday, February 5th. It's Monday, February 5th. Morning, Scott. I think I got a message that you made a comment. View channel. There we go. Morning, Chris. Let's go monetize this. Before everybody jumps on. So I can make some money. FYI, my entire January earnings on YouTube was $25. So, at least it's lunch. I don't make much off of this. So when I can monetize, it's a good thing. Morning, Scott. There we go. We are monetized. Let me just make sure. There we go. And hopefully everybody enjoyed the newsletter. They've got earnings coming up 15th. Have a hunch, bet a bunch. I like that. FNGU. That's the, I'm not going to go over it on the podcast because we have gone over it, and it's just a levered ETF. It's nothing more than that. Let's see. FNGU. It's between 61 and 286. Here, we'll go over to Seeking Alpha and look at it, since that's probably a better place to look at it. Morning, Lane. FNGU. Fungu. Yeah, remember, it's a triple levered ETF. This isn't one you want to hold on to for a long time. Pre-market, it's up 0.54. On Friday, it was up 14%. The reason is because Meta was up 20%. It's just not levered enough for Meta. The most dangerous FANG. I mean, this is from 2018. Nobody covers this thing. This is what I want to... Let's look at the peers. Let's see what the peers it says are. Bulls, FNGD, which is the down one. TECL. So you look at FNGU up 218% over 1 year. It's by far the leader of these. So year to date, let's see, has it kept up? Yeah, it's kept up. It's triple levered, but again, I do not think you should be holding this. This is like TQQQ. I mean, be happy with the profit. Make sure you're happy at the end of the day with the profit. You take a look at this. It got you in at 228 here, which was a great buy. I mean, God, look at the algorithm on this. I would not suggest a 4-hour algorithm on this, even though it's levered 3 times. It makes you 56% over 2 years with the algorithm versus 16% buying and holding. I still wouldn't recommend. I mean, it's hard for me not to recommend it, but the 65-minute algo, let's see how that performs. 80% versus 77% buy and hold over 8 months. That's not bad. 262 down here right before the Facebook earnings. You're up at 300. Now, here's the problem. I mean, and this is the real issue, is that if we go over to weekly, I mean, all of these names are at super, super all-time highs. So it's just a little. I wrote a newsletter, and it's in draft form. Myself and the Weekly Stock Pick are doing a combined newsletter about when to sell. And I did it this weekend, and hey, when to sell at all-time highs or 52-week highs. I kind of go over it and say, hey, use those sliders. NVIDIA has a cross-up. FBCG, which I just bought my dad. Uber has a cross-up heading into earnings. Palantir, Roblox. Is Palantir earnings this week or next week? It's tomorrow. Is it today? It's today post-market. Let's see. Okay, I got to put in that one. PLTR. Let's see. Get rid of that. Because it's FANG. I think FANG is in that. Let's see. Holdings. Doesn't even tell me what the holdings are. But I think Meta's in that FANG index. I mean, I know it's not in the thing, but let's see. Facebook, I think, is the FANG part. And Scott, when you're asking me why does it escalate from Meta rising, get the hell out. You're gambling. You're just gambling. That's all that means. But FANG, Facebook, is Meta. So, but it doesn't even tell. I mean, there's just not a whole hell of a lot of information here. You can go to the prospectus page and probably get more. Yeah. I need to start that smart checklist, and Chris, in trends. And I've said this, and I think you've been listening long enough to know that it's true now. I don't use half the crap in TrendSpider. I mean, it is such a great program. Roblox over 40 again. And their earnings are coming up tomorrow after pre-market, February 7th. Okay. We got a lot reporting. Wow. Okay. Let's see. Brokerage holdings, anything different here? I wish I read. I really should read. I don't. Snap, Snow. We got those. I see a dog running around here. Covered call ETFs. XLYG, XYLG, XYLD, SPY I. I got rid of my SPY I. I put it into the Qs. I'm just doing much better on the Qs than I am on SPY I. Energy names. Nothing. Levered ETFs. Let's see if any of the bull stuff got. Let's see. SMDD. SPXL. That's a long one. FNGU. FAZ. UPRO. So we have the long FANG, which you just got into, Scott. Has another cross up. So yeah, it's a bullish one. RSI's up high. FAZ, financial. That's the bear. But S&P 500 Ultra Pro. Morning, Bren. Listen, Taylor Swift won the all of the Grammys last night. There's no reason to think that the Democratic Party hasn't fixed it so that the Chiefs win. You know, it's all a conspiracy. Douche is thinking that. Seriously, come on. You're gonna be gullible enough to think that that they can do something like that? No. Listen, if there's a party that's that good at cheating and manipulating the world at large, I don't have a problem with them being in charge. VUG and SPY. SPY got a cross up. Look at this. Interesting. VOO and SPY. Low cost. Let's see the spider sectors. XLC, XLG. XLG I like, by the way. I think, you know, again, if you're into Invesco sectors, XLG is one that I have a good amount in my parents' portfolio. And, I mean, it's been solid. This is the top 50. So instead of the top 500, getting the 500 names, just get the top 50. I mean, I do think, while I don't agree that the top 10 or the top 7 or 6, whatever you want to put in there, I don't agree that those underperform the market. I think they either meet or exceed the market because I think they drive the market. But I do think those additional top ones could push the market higher. I don't think that, you know, the 400th stock in the S&P, you know, creates market movement. Oh, come on. There we go. You have 56 holdings in this. Interesting. I thought there were 50, but 56. So it's good names. I mean, Lilly, Broadcom, Berkshire, Microsoft and Apple, by far the largest. Then Nvidia, Amazon. No. $8,500? Thanks, William. No way. No, I had friends who spent, when Atlanta got into the Super Bowl, I had friends who spent like $5,000. I thought they were nuts. And then they spent $5,000 to watch Tom Brady beat them in the second half. I mean, that was the ironic, I don't know. You paid $5,000 to watch Tom Brady beat you. USA Quality. That's an interesting one. McDonald's. McDonald's crosses up on decent earnings, not bad. Snap, we have Daiquo, DQ. Fastly. Social media ETF. That might be good to play for both. Palantir, ARCG crosses up. Trading Desk. Tractor Supply. Those are all, I mean, Trading Desk is one that is an interesting one. I've got an interesting social request. McDonald's is the only Dow stock. Wow. Let's look at NASDAQ. Trading Desk. Synopsis. CDW. Okay. We got the NASDAQ 100 covered. Now S&P. Whoa. My housekeeper's coming tomorrow to clean my house. I think I'm going to be off Friday, just so everyone's aware. LMTBLK. There we go. Okay. Friday I'm driving to Nashville. Hold on, I see a blanket running around, bumping into walls. Hey, come here. Come on. Come on. Come on. Hey. Come on, Penny. As long as it's Penny. Penny doesn't cry. Daisy's the one who cries. Palantir at 17 is up 2%. NVIDIA is up 3%. Lilly is up 2%. I think Lilly goes over 700 on their earnings. Costco is solidly above. Cleveland Cliffs is down at 20. This is going to go under 20. Boeing will probably go under 200 again. The only catalyst for Boeing is bad catalyst, not good catalyst. So, Walmart at 170. At 158, should have been adding. We'll go back over to the 4-hour here. Remember I said, hey, they're going to cover this gap? Yeah. I mean, that was an easy once you gain confirmation. Okay, here. Once you gain confirmation, and Walmart isn't one that you buy and get rid of. You don't trade this one, but that's a nice 10% right there. It ain't going anywhere. You got a 3-for-1 split coming up. So, yeah. Okay, let me look at your question. Nothing. Question. Okay, we'll go over to QQQ. And then I got to get my notes in order. My notes in order. Okay, I'm going to start opening up links. Let's go to, Facebook group. I'll open up the Facebook group. Because it is a good advertisement for the Facebook group. McDonald's is out. They beat. But it's just run up too much. No, I'm not going to do top. I'm going to do all. There we go. That's a good one. This is a great question. I'll keep their name kind of private. I mean, it's in the yeah, AXP is a great stock. I mean, God, it's a good stock. Here we go. This is a good analysis of Fortinet that somebody asked about. This is Ross Cameron's best trading hours.
Ross, what is the best time of day to trade? If you'd asked me this.
Okay. We've got that one. We've got a nice short. Caterpillar beat on earnings. That one's moving. This one is Mara. Jump in Bitcoins produced in January 2024. That one crazy. Novo buying Catalent. That's what I needed to do, not Catalent. Catalent. This is interesting because it provides them distribution. AMZN weight loss drug. We talked about this. Shows promise. These ETFs could help investors reduce big tech exposure. This is an interesting article from CNBC. And hopefully the advertisements don't pop up there. This is X. This is from, let's see, top earnings this week. Palantir, Spot, Snapify, PayPal, Uber, Roblox from Shay. Yeah, I like Shay. We're going to go here, and I'm going to pull that up, and then I'll show you. I posted this. I think Dan Ives is right. By the way, positive. What is it? Apple Vision Pro reviews all weekend. Okay, I'm going to go into here. We'll go to Seeking Alpha and go to the core portfolio. We're going to look at that. Powell's 60 Minutes interview was really good, by the way. Trend Spiders status. Wah, wah, wah. The resemblance is uncanny. And then we have Weeble. This is really good on the economy. Not only but the markets. The S&P is up 38.4 so far in this bull market. The average bull market is 114%. Median is 76%. So we still have room to go. Doesn't mean we won't go up and down, but I liked this interview with Tom Lee. This thread with Tom Lee. It is an interview. I'm going to hit the pause button. There we go. Okay, and that's everything that I've got to go over. Let me just check out FinViz. Anything interesting on insider buys? No. Natural gas, crude oil. Yeah, nothing. Let's go and what are pre-market stuff doing? Let's see. Gold down 1.5%. Silver down 1.5%. Crude oil up 0.04. NASDAQ fluttering around. Trending news. 4 stocks to watch on Monday. This is good. We'll put this up as well. Okay. And I'm going to put that up beginning. So Seeking Alpha. Let's see if there's others here. I like that. Oh, these articles for stocks to watch. NVIDIA. This is. I mean, yeah. We kind of include this one too. I mean, NVIDIA, I'm going to be buying NVIDIA and SMCI up into NVIDIA's earnings. And we'll open up one more. Wow. Global debt hits new record. Okay. Let's look at the Qs. Yes. There are some things to watch, and I don't know them. I'd have to look them up, like Google, and do some stuff. But yes. Here is, we're going to look at a long term. And what I'm going to do is take this and move that there. I'm going to remove all annotations. This is just, okay. In the my weekly stock pick and my collaboration on Substack, this is one of the things that I say is to watch RSI. And divergence specifically in RSI, not RSI oversold. You can sell it when RSI gets just completely extended. And you look at RSI right now, it's up at 70. Doesn't mean it can't get up here to 80. So just remember, it got here to 80 on this run. It's only at 70 right now. We've come down in July of 2023 when we went into that fall. This bubble, it was at 74. You were at 72. I mean, it stays up there for a little while. This is all the way from June until July, the end of July. So you can stay up there for a while, but you do come down. You know, the market didn't crash to October. It definitely had a pullback. But I would expect this kind of pullback to happen, and you just got to kind of be patient. I've got, a couple $100,000 on the sidelines. That's looking. I am going to take and Joe will like this one. I am going to take a test drive of the new Highland Model 3 Tuesday or Wednesday, I forget. I made an appointment, going to go over to Tesla because they will allow me to transfer my full self-driving over to a new car. So I may just do it. I may just buy a new car. So, yeah. QQQ. Yeah. If we pull back, I would, God, I mean, what's scary is, look at how, this is from the November 2021 highs, and this is the Qs. Where are most people holding? Where's a volume shelf? It's around 360. You're not getting a hell of a lot up here. It's not jumping out like tons of people are buying up here. So, I think we blow past 500. Honest to God, Brandon, I just, with Powell last night, Powell's interview on 60 Minutes last night, don't fight the Fed is in play. And he said, we have a strong economy. We have good things going on. We will reduce, but not in March. And he does think that most likely May, will, this summer. So it's May or June. And that's, well, I think the market during that little hiccup, if you will, when he said on I think it was Tuesday of last week or Wednesday, when he said, hey, we're not going in March. And then the market pulled back. I said it. I was crystal clear. It's a buying opportunity. Ooh, ELF earnings this week too. I got to put that in. ALF. And I think there was something. Hold on, let me go over to Seeking Alpha, because there was something in cosmetics this morning that I saw that made me think Ulta. Oh, Estee Lauder. Estee Lauder. Let's see. Estee Lauder announced their earnings, and they were pretty good, I think. Yeah, it's up 16% in pre-market. I mean, Estee, let's post that one. Let's post that one. Yeah. We're going to post this one because it's earnings week. Elf and Ulta, I think, both get a jump on this one. But this is just a beaten down stock. So that one's a solid one. But oh, here's Alpha Picks. I'll show you Alpha Picks. You go to Alpha Picks. So here, and this is what you get in Alpha Picks. You get access to this group. So it's $99, I think. You get like Technoglass removed from Alpha Picks portfolio due to hold ratings. This is this morning. I guess I got an email on it, but I haven't read it yet. Metastock soars. So you get all of this analysis, okay? You get these 4 areas for $100 a year. You get the analysis. You get the overall portfolio, and it includes strong by quant. I don't know. Let me see. I'm pretty sure you get just this. So it doesn't allow you to see the history of the quant. That's what Seeking Alpha Premium would give you, but their performance, and you get the about. So you get the analysis, you get the portfolio. And so what it does is it tells you, hey, Technoglass is removed, and you get this email. It is an email service. It's not a texting service. This is for people who just want, to invest passively, but maybe want some catalyst stocks that they can take advantage of. Like Meta, up 20%. You should have been in Meta. If you're not in Meta, you're crazy. Electric, Powell Industries. There's no freaking way I'm in Powell Industries. I don't know. I knew nothing about this stock until I saw this. Well, POWL, you want to see how we'll look at this one. This is how good the quant is, POWL. Look at that stock. We're going to go weekly. Yeah. Look at how good that stock has been since October 2022. And so if you go to the picks, let's see, how long has Powell been in portfolio? We'll look at Powell. LMNOP. Powell Industries. 5/15/2023. So when did they get in? 5/15/2023, which is right here. So Powell Industries on May 15th, trading at 54. We'll go up there. This is over 8 months, 68%. So if you want the Alpha Picks, it's on my link tree, and it's the third one, Alpha Picks. And I think it's $100. I'm supposed to have a special at some point in time, and I don't know. Full disclosure, I think it's like $10 off. I don't think it's a lot. Let me see if I can find it in my email. They had emailed me about something, and Seeking Alpha, affiliate offer. Let me see. Affiliate offer update. We're excited. Oh, here we go. Okay. End of the day today. Don't know what time that is. It'll be $89. So Alpha Picks, Alpha Picks sale. From $99 to $89. Okay. You can only, if you confirm the previous offer update in emails, please confirm the text below if you have not done so. Okay. You will need to use an Alpha Picks link. Oh, I'm attaching creatives here. Copy link. Let's see. I am not a robot. I am not a robot. Let me see what the other ones have. Copy link. Link copy to keyboard. 55% off. It's all about the love, man. It's all about the love. Let's see. I think they're promoting 55% off. Yeah. Let me see. What the hell? I'll download it. We'll copy. And then we'll paste. Okay. Valentine's Day offer. We'll go over there. But I think, Sam, that gives you a great one about the hopefully I answered your question about Alpha Picks. At some point in time today, it goes to $89, and that's 55% off. So we'll go about, and I'm going to move that over here. Okay. And I will go back to QQQQ, and I'm going to go to a weekly. I think semis. I mean, if you're not in semis, you're out of your mind. You crazy. You crazy. Let's see. Let me look at something. Elf is way up. On is up. Cat is up. Good morning. Meta last week. What's your number one earnings play this week? Affirm. I mean, let me see. I'll tell you in the newsletter, Steph, I will list my favorites. I haven't gone over the charts, but I'm watching Lily because that's in the core portfolio. Uber because it's in the core portfolio. Baba's interesting, not super. Let's go into it. Disney's interesting because what will they announce? ARM is interesting. Affirm, I do need to put Affirm in there. Affirm's interesting. Dexcom is super interesting because I wonder if that can support the run that it's been on. Pepsi's interesting. Pins and Snap based on Meta last week. Those two are super interesting. And Palantir's been beaten down. So Palantir, I think, could run to 25 this week. Roblox, I think, could go to 50 if they show some positive stuff. ELF is interesting, especially with Estee Lauder this morning. And like you said, Affirm. But yeah, there's a lot this week that could be. And Brandon, the Apple Vision Pro got super, super positive feedback. So I consider that one to be good. Okay, I don't see anything on FinViz here. We're going to go here. We've got the newsletter there. XLG, if you guys aren't in XLG, I went over it. XLG is a great one. We're going to close that. We've got that. We've got that Fortinet. Okay. I think I've got everything sorted out here. Oh. PepsiCo is not one you trade. PepsiCo, I've said it before, under 170 or under 180. I forget which price I had. Do not go out and buy one, Brandon. You do not need one. Go to an Apple store and try it out and just continue to do it. I don't see myself using it enough to justify the $4,000. I see myself using it and liking it and seeing it and saying, okay, I want one, but it's kind of like the watch. And so my history with the watch was, I asked for it for Christmas. Well, I didn't know what to tell my parents to get me for Christmas. And they were like, your brother just got an Apple Watch. It was the Apple Watch 3 series. And I said, I'll never use a watch. And then I got the watch. I didn't realize how much I would actually use it. And I think that's the same thing as what would happen with the Vision Pro. I just don't know how much I would actually use it. And then I would fall in love with it and I wouldn't be able to be without it. Yeah. The guy, listen, influencers will be influencers. Okay, let me hit record. I'm going to hit record. You guys can continue to comment. For everybody that's here, make sure you subscribed. I think 70% of the people who join my live are not subscribed. So if you're interested, I have a system. I do this every morning that the market is open. I'll give you some plays so that you can look at it. I have a newsletter, so if you don't want to sit and listen to me talk for 2 hours, you can just get the newsletter. Everything is in the link down below, linktr.ee linktree/daily stock pick. Yeah. So continue to comment. I will read them. After I get through with everything. No. Pavan, it does nothing. It does impact earnings per share, but not, it's all adjusted. So Pavan, here, the way splits used to work back in the day, when, we didn't have the internet, we didn't have a lot of stuff, you had to buy a full share. The only fractional shares that would happen would be on dividend reinvestment. And so dividend reinvestment, you would get fractional shares, but other than that, you couldn't buy fractional shares. Then it was, 2015, 2017, somewhere in that neighborhood, fractional shares really became the standard. And so if your brokerage didn't have fractional shares, you bitched at them, you moved to another broker, blah, blah, blah. But fractional shares now are just commonplace. So a split does nothing other than affect options. And it does affect earnings per share, but not in the way that you would think that it would boost the stuff. The reason they do splits is for some type of share rebalance. But it's nothing to do with the actual fundamentals of the business or the buying power like it used to have. You could go out and buy $5 of Walmart stock right now on Webull if you wanted to. You could buy $10 of Palantir if you wanted to, even though it trades at like 17. You could buy $20 of Microsoft, even though it trades at $411. So splits do nothing. Lane, thank you. I think I have 5 though. So maybe not 1, maybe not 5. I've done 5 of the paid newsletter in the series, and I think I have to change the name from education more to experience, trading experience, or strategy or something like that. My strategy, but I may take a break from the stuff. And I don't buy I buy fractional shares in ETFs, Chris. So for instance, QQQ, if I want to put 20 grand into something and split it up into 4 buys, I'll buy $5,000. So I won't dollar cost average. I will just stagger my buys, but I will buy $5,000 at a time. But yeah, I think this weekend's is going to be, and it's not tax advice. It's more just, hey, we're coming up on tax time, and you should be thinking about 2024 taxes, even though it's February. You should be thinking about how you're going to pay taxes, what your trades mean to your taxes, and where you're trading stocks. And so I'll go over and it's timely because SMCI has been so crazy. So I think this weekend I'm going to take a break from the series, and the paid newsletter will be more about how to trade and what strategies I've employed between retirement accounts and brokerage accounts, and buy and hold versus selling short term for gains. Because you absolutely, it's February. I mean, we're in the first week of February now. You should have your 12 months planned out. And that's part of the reason why I can't sell my SMCI in my brokerage account, is because that would alter my plan for the year. And listen, it's a good problem to have. If I thought that the stock was just running up and it was hype, absolutely 100%, I'd be taking the profits and paying the taxes. No reason to hold on to something just for taxes if you think that it's hype. GameStop, no reason to hold on to something like that for a year. Since it was hype, it was a short squeeze. Take your money and run. Then that may be, unconventional thought from some of the YOLO, Roaring Kitty styles. Remember, Roaring Kitty was a fundamental investor. This dude was not looking at charts. He was 100% a fundamental investor. So he went in and did the due diligence. He had his plan, and he stuck to it. There is a lot to be said. He's a fantastic example. A lot of people like to make fun of him, but he's a perfect example of having a hypothesis, sticking to it, and making sure that you don't alter plans because things have changed. SMCI for me, it's a long-term play. I want to hold it for at least a year. So I've got 3 or 4 different buys in my brokerage account between July, August, and December or October, somewhere in that neighborhood. But yeah, so I think I'm going to take a break and do a tax one this weekend, because those learning ones, they take a toll on your psyche a little bit. They get when we're at all-time highs and stuff, some of those strategy emails do kind of, oh shit, we're at all-time highs. This one's at this point. This one's at this point. God, I'm nervous. It does get you a little bit nervous. So I want to take it and kind of move it towards a good strategy, which is, hey, it's timely taxes stuff. So, reverse splits are, what the triple levered ETFs do when they get down to $1. But splits overall, they don't make a difference. Reverse splits for a decaying asset, now that makes a difference. Okay, let me hit the record button. Good morning. It is Monday, February 5th. Monday. We're at all-time highs. If you didn't know, I've got a newsletter. It's free. The weekend newsletter for the educational series, I'm on part 5. It's how do I come up with the buy, sell, over and under price. That has been, ironically, extremely accurate. But I do put one in there that I'll talk about today that I haven't been super accurate on over the past, 4 or 5 months. But how do I find price, stock example shares, no man land, and RSI. And what's the third one? Hold on. I forget what I wrote about. But, how I day trade using confirmation with triple levered ETFs. So it's part 5. So portfolio status check. I kind of go over this. And this was, I don't charge for the intros. I try and make sure that the weekend isn't all paid, that you do get something out of every newsletter, even if you're not a paid subscriber. I had a subscriber that said there was a payment issue with one subscriber, and I couldn't figure out. I just gave him. Understand, it's $120 for a year for the amount of work that I put into these paid newsletters. It's not much, but I'd rather have you get the free one. And when you find the time and you find the interest, then subscribe for the paid one. But my portfolio check, I checked my Fidelity account year to date. I'm up 0.28%. SMI and VOO are 4%. QQQ is up 4.7%. I am greatly underperforming the market. Just so you guys know, even though I'm number 1 on the trading portfolio in Savvy Trader, I am way underperforming this market. And it's because of Apple. Apple is down year to date and down 3.47%. It is underperforming. The valuation of Apple has just caught up with it a little bit. It is down 3.47. We went into January, and it was a super strong stock. It got up there to 197. It's pulled back, and they didn't kill it on earnings. But that's what's killing my portfolio. Am I changing my strategy? Hell no. My strategy cannot be your strategy. Understand, portfolio managers will tell you Apple should not be 60% of your portfolio. I do have it as 60% of my portfolio. I believe in the company. Like Roaring Kitty says, I believe in the stock. I like the stock. But it should not be your strategy. My strategy of my portfolio is not necessarily to sell Apple at the times where it does peak. In my retirement account, I do sell it at times that it does peak. I don't get out of it, but I do trim it. And then I buy at the lower rate. But in the brokerage portfolio, I don't. And my strategy is not to sell large chunks of Apple to get it down in my portfolio. It's to use the other capital in my portfolio, the other 40%, to try and grow it more than Apple. Just unfortunately, I haven't been able to do that. I don't need the cash. I don't need to do it. But understand, if you want to get this newsletter, it is 100% free. So sign up down below at Linktree, linktr.ee/dailystockpick, or just go to dailystockpick.substack.com. Now let's talk about the Qs. We are opening up about even. It has been fluttering between negative and positive today. We do open up down 0.04%. So I would expect us to get to the green. Things have been really good. You're seeing this kind of button hook here, but we have confirmation over the 9-day. You have the MACD crossing up. You do have the RSI in no man's land at 63. It's coming down off of a 50. So that's why we're getting pushed up, because it quickly went into oversold territory. And if everybody, starts selling, this is a buy the dip market. It's a 100% buy the dip market. I've said it many times before. It's buy the dip market. Let's talk about what we have today. Alpha Picks. Remember, I'm only an affiliate for four things. There's TrendSpider, which I do all my charting on. There's Seeking Alpha Premium, which is basically an information service where you get access to the quants, you get access to you evaluating your own portfolio, and you get all of the analysis and all of the articles on Seeking Alpha. This is $189 per year. It is very simply, it saves me way amount of times. If you're doing research on things and you're using FinViz and you don't have a big enough portfolio, that's fine. If you do have a big portfolio and $189 is not going to kill you, this Seeking Alpha Premium service is well worth the subscription. And then there's a third one, Alpha Picks. And it's this third one down here, Alpha Picks. And you can see here, if we go into the the performance. The performance is really what you want to look at. The performance, they're up 97% versus the S&P is up 31%. You can read about the performance. You click on the link in my link tree and you get access to these 4 things. You get all of the analysis of the Alpha Picks portfolio. Meta, ready-made solution for your portfolio. This was Twilio. This is Powell Industries. I would never have picked Powell Industries. It's up, way up. Technoglass removed from the Alpha Picks portfolio. Today, you can look at that. You get access to the entire portfolio. Today, it's the start of a Valentine's. Seeking Alpha loves you. 55% off. It goes down to $89 for the first year. $89. So click on this third link right down there. If it says $99, just wait until the end of the day. This is not something where you have to rush in and get it. Just make yourself a note. Add on Siri on your Apple device. Just do a reminder for tomorrow morning. Sign up. It's $89. It says it's at the end of the day. I don't know what time it does. But they told me that it would be the end of the day. So remember, that's a special sale. Estee Lauder announced earnings. Estee Lauder, they're up. Let's look at Estee Lauder is up 16% today. 16% on just this earnings. Now, it wasn't the earnings that made them go up. It was the layoffs. So this is a company that has been in free fall. We can go over here to TrendSpider, and we can look at Estee Lauder. I am not an Estee Lauder fan. I'm not telling you to invest in Estee Lauder, but what's interesting about this jump is we do have a couple of favorites, and I personally own, you can see, just this is a weekly chart of Estee Lauder, how far they've come, how far they've fallen. It is not one. You do have confirmation. You do have a positive 9-day. I still would not invest in this company. It's a little bit of a risk. But one that I do want you to look at is ELF. ELF, we've talked about that weekly channel that's up. We've talked about this current run that we're on. It is up, let's see, it is at 172, up 1.41%. They have earnings. Now, their last earnings, we can look at exactly what happened. They have earnings February 6th, tomorrow, post-market. You got a positive 200-day. You had the golden cross back here in December, and it has spurred another move. Now, look at what happened on this earnings day. You popped. You popped up during the August earnings. Looks what happened on their last one. They sunk down, and then they popped. It looks like a retail favorite now, but look at it since this pop in August. It has not gone up that much. It's 25%. Yes. That is over 187 days. So it's a long game. It is overbought right now. What do I expect? I would play the earnings. Am I buying into it now? Probably not. You know what I do own? I personally, and I should have picked ELF, but in the long term, I'm okay with Ulta. I bought down here at about I think it was around 394, maybe 400 or so. We're at 506 right now. Ulta is one that they have earnings later this month. Looks like March 7th. So this is one that right on here on the MACD. The MACD is kind of crossing down. This is in overbought territory. I would completely expect it to actually get down to this 464 in a bad market, but we're still in a good market. So understand that Estee Lauder's earnings, both those companies, ELF and Ulta, I think come into that. 4 stocks to watch. Let me see. 4 stocks to watch. Did I close this one? 4 stocks to watch. McDonald's, Palantir, and more. NVIDIA it adds to its recent gains. NVIDIA's up. NVIDIA's just one. Understand, NVIDIA is one. I've been investing in SMCI of late, and it's been a great investment. Let's just say it is up, 3% today. It's over 600 again. NVIDIA is up 3% at 687. These are ones you just buy. Honest to God, before their earnings, which is coming up on February 21st, just buy it. I don't care that it's at 688. It's at all-time highs. Just get into NVIDIA. If you want $1,000 of NVIDIA, Buy $100 of it today, buy $200 of it today, and buy $200 of it tomorrow. Dollar cost average your way in, but get in there before their earnings. These are stocks that will pop. But NVIDIA got an upgrade. Goldman Sachs boosts target price. They added raised its target price to 800 from 625. The Wall Street estimate is 679. Solid stock. 4 stocks to watch Monday: McDonald's, Palantir, and more. Palantir is an interesting one. Will be in focus with the data electronics company scheduled to Q4 2023. Wall Street expects Palantir to add 8 cents of revenue. Investors and analysts will be paying close attention to the performance of the firm's commercial division. William Blair warned that the company's overall growth is expected to lag, widening cracks in the U.S. government, blah, blah, blah. Here, Palantir, we can look at the stock. It is up 2.54%. I would expect on decent earnings if they do blow it away, and it is, I believe it's today after market. Yeah, today post-market. I would expect on strong earnings, this one to get something like this jump where it went from 15 up to 17. I would expect it to jump from 17 up to probably 20, where it topped out here. It topped out at 21. I would expect $20 to be your... Look, here's the thing. If we pull this back, and we pull this back a couple earnings ago, I'm going to pull it back to here. I think this is a $20 stock right here, August 1st. Where are people holding this? It's between $17.29 and $18. There is a jut out up here at $20. There are plenty of people holding this at 20 to bring this stock up to 20 on any kind of decent earnings. So understand, I think that's the way to play this one. I'll get this out of the way. And I'll go into more depth when I actually do it. But I was taking a look. Devon's coming out of the core portfolio. I'm making some core portfolio moves, and I'm taking Devon out of there. I'm sick of it. They've got their earnings coming up February 27th. And the reason let's go into it now. The reason I'm taking Devon out is because of this long term. This channel was created to have the stock trade closer to 200-day as it traded under its 200-day for years. Energy has just not been a loved sector in the past. So old support turns to new resistance. And you can see the volume-weighted average price is right where it's at, 40. This goes all the way back. That volume-weighted average price goes back pre-pandemic, March 2019. You can see pre-pandemic, this was a $30 stock. That's where I expect this one to go. Just my thought. Again, you haven't had a death cross on this weekly, but I'm taking it out. I'm taking it out. Let's look at this. Tom Lee. Important to see how the S&P reacts to 5,000. Market has been strong. If this is a strong market, 5,000 won't mean anything. But in February, 5,000 could be short-term top before there's a big air pocket. It's a level to watch. Remember, he's talking about the S&P, but you can just look at SPY chart if you want to trade this one. SPY right now is at 492. I think we get to 500 on this one. But again, to Tom Lee's point, you're going to want to watch. I'll link this in the newsletter. You're going to want to watch him, what he says. It's important. Gunjan from Wall Street Journal. The S&P is up 38.4% so far during this bull market. Goes back to February 2022 where we had that nice dip. The average bull market is up 114%. Median is 76. We are only up 38. So if you think this one's over and done with, I don't think so. Now, what's also interesting is this chart from TrendSpider. The resemblance is uncanny. Look at this chart, if you would. It is a QQQ hourly, and this goes back to December 20th, where you had an inverse head and shoulders, and you have an inverse head and shoulders now. Do we get that pullback? If we are in this inverse head and shoulders, we're gonna get a pullback. It's time to take a look at your portfolio, and if we get this pullback, it's before Valentine's Day, because then you're gonna get the shoot up. So understand it could be some type of pullback. I will include the Webull. If you're not in Webull, I have a Webull account. This Webull is the fourth tool that I really sell. It is part of an affiliate program, or if you sign up for Webull, I get stocks, you get stocks. It's kind of a thing. I use this as my sports betting. I know Super Bowl is coming up this Sunday. For me, this would be a way I make money on stocks. I don't make money sports betting. I saw 60 Minutes this weekend on sports betting. Interesting thing. But yeah, I'll include this screenshots of the app. I really like it because they included, Webull included for this week. I'm watching Lilly, Uber, Baba, Disney, ARM, PayPal, Dexcom, Pepsi, PIN, Snap, Palantir, Roblox, Elf, and Affirm for some of the earnings. But I thought it was interesting. Now I did get pre-market. I did get an email from. If you sign up for Seeking Alpha Premium, you put in your portfolio like this. This is the core portfolio. And again, I'm going to take Devin out. But I did you get ratings. So, and the ratings upgrades, XLY. XLY right here is an upgrade from a hold to a buy, which is interesting. Hold to a buy. The other one, NVIDIA. I mean, like I said, just buy NVIDIA. This one went from a hold to a buy. Downgrades. Cleveland Cliffs, which hit 20, had their earnings. They're now down at 1972. 20 is that price point. I tell you, buy under 20 and you can sell over 20. But Cleveland Cliffs, buy to a hold. The other one, buy to a hold, Meta. Strong buy to a hold. This one skipped buy. It went from a strong buy to a hold. Doesn't mean you get rid of your stuff. Just means, hey, we're waiting for an opportunity to add there. So I wanted to put that one in. There's an interesting Magnificent Seven versus the tech bubble. This is an interesting article because it goes over the differences. Everybody points to the bubble of the 2000s. No, it's not the same. So understand, it is not the same. One significant difference between the Mag 7 and the tech bubble is the penchant to reinvest for growth. The Mag 7 reinvests 60% of their cash flow from operations through growth CapEx and R&D. The reinvestment rate is more than double the 26% the tech bubble 5 and about 3 times that of the S&P 493. So they basically reinvest in themselves. That's why I'm invested in Apple. It's not because Apple is something that is crazy, growth-wise, but they reinvest in themselves. And here, we view Apple like Meta 18 months ago, entering a major growth cycle despite the street giving no credit, with AI about to tap into an installed base of 2.2 billion and iPhone growth, X tough comps, now growing again. China will grow again in the second half. That's their view. That's Wedbush, Stan Ives. I am a believer in this. If you saw anything about the Apple Vision Pro this weekend, I'm bullish. I'm bullish on it. I didn't see a bad review on it. Now, it's all hype. I mean, it's all hype. You're going to start to see bugs. You're going to start to see overheating. You're going to start to see something. Did I see something in SMCI on Friday? Because if you got the newsletter, I said, hey, we're going to trade between this 570 and 580 channel, and I put it in. I published this in the newsletter on Friday. Guess where we ended the day? Right at 579. So we had this nice little run up into the morning, and then we kind of traded in this range. And I when I published the newsletter, I said, hey, we're going to be in this range. It was exactly that range. Where are we in SMCI right now? We're trading just above 600, I think, 604. You're up 4%. Is this too much to ask for? The catalyst that you're looking for is NVIDIA earnings, which is next week, I think. But that's the catalyst for this one. The valuation is not crazy on SMCI. So just understand, I don't think that it's nuts. Here is what Shay is looking at. Shay Boular on Twitter. I really, really enjoy his stuff. Monday, Palantir, Synop, NXPI on his way up. Tomorrow, Snap, Enphase, Elf, Fortinet, Spotify, and Fresh. Wednesday, PayPal. I've got PayPal. ARM, Disney, Uber, CFLT, Paychex, Roblox. Thursday, Affirm, PIMS, Net, Bill, Dollar Tree, PI, CLSX, Lightspeed, and then Friday's Pepsi. So if you want to play earnings, follow Shay. Look at that tweet. I'll include it in the in the newsletter. In the newsletter as well, these ETFs could help investors reduce big tech. These are equal weight ETFs. So if you want to read this article, it's from CNBC. It's free. I'll put it in the newsletter. AMZN. We've talked about AMZN before, AMZN. This is their weight loss drug. Now, understand, AMZN has not taken off the way that Lilly or the way that Novo Nordisk or any of the other weight loss drugs that are out on the market has taken off. This one is up 0.44%. They have their earnings coming up tomorrow. Is it pre-market or post-market? They may have some announcement of something. I would doubt that they would do it on earnings day. You've run up on this one from 264, and I've said, hey, all the way here from November. This one's up 22% in the current run. On the algorithm, you have your ex-dividend date on February 15th. But read this article about AMZN weight loss drug. This is one that could come out with Lilly and Novo Nordisk. This would suddenly surge AMZN because understand, weight loss drug is just going to throw these drug makers into tech territory. So it's a good article to read. I kind of like that one. Speaking of this, Catalent was bought, or an offer was made, and Catalent is up 13%. Because Novo Nordisk is buying them. This just, again, the merger is complete, which is expected by the end of the year. Marathon Digital said their jump in Bitcoins produced in January 2024. I am still holding on to Mara. I am still waiting for that second leg of the Bitcoin bump. I don't know that we're going to get it. You got in here at 1650. I think I'm in at 26. I think I've dollar cost averaged my way down to 24. Not much. I haven't put much weight into this one yet, just because that 50-day is still moving negative. The MACD is down here. Yes, the RSI is moving down. In pre-market, you're down, or I'm sorry, in the market, you're down 3% on this one. But I'll include that one. Caterpillar. I think I own like 5-6 shares of Caterpillar. They beat, and it's up big. Let's say Caterpillar. I don't own a ton of this, but I do own 3 or 4 shares. In the 200 range, I think, is where I'm at. Maybe 220. We're at 328. This is up 4%. They beat. You can read about it. Non-GAAP earnings per share, 523, beat by 48 cents. Revenue of $17 billion, missed by $30 million, but it was their guidance. So everything remains strong. This is Ross Cameron from Day Trade Warrior. I like his stuff. His stuff is really good. This is a short. It's 1 minute long. I will include this in the newsletter. He says the best trading hours are between 8 and 10:30. Why? Because of volatility. It used to be that you had to trade at 9:30, but what happened was the pandemic started and everybody started waking up early. So yeah, he's just going over what hours he trades and stuff like that. I did say in the paid newsletter, just so you're aware, I will have, and I'll have plenty of notice on this, I will probably be upping the price of the paid newsletter again. And the reason is because I do have an archive of content that you can learn from now. And so upping the price makes sense. The other thing is I've got plans this year to do some additional things for the paid subscribers, like free trading. Trading session. So we'll go live, with trading one day. So if you're interested in that paid newsletter, buy it for the year. You'll get some notice of that one. Social request. Chris from email wants me to look at Fortinet. He's got Crowd, but was interested in Fortinet. So let's take a look at Fortinet. So you know, they were the cybersecurity stock that announced horrible earnings, 2 earnings in a row. And I said, hey, it's cybersecurity. It's going to come back. Wait for it to gain confirmation. And once it has confirmation, it should go. Well, when was the confirmation? Well, the 50-day starting to move. Look at the 50-day. When it started to move positive and you had confirmation here at 50, that was the time to get in. Do you still have time? Absolutely. Because you've got $75 to cover this gap. You've still got it. Where are you going? You're just kind of floundering here. The MACD, it's not super, super high up here. You can see the oscillator right here. Let me shrink this RSI a little so the MACD is a little bit bigger. The RSI is at 58, kind of no man's land. You got your earnings coming up here in post-market tomorrow. Fortinet reports. I would expect to see some type of positive. You had the golden cross here. Solid gap fill from the last earnings. Took 42 days, but a 25% backfill. This is, again, you have this gap here, 75. Am I buying at 65 before the earnings? Probably, because you look at CrowdStrike, you look at PanW. I mean, those are the other two. CrowdStrike has their earnings, let's see, later in the month. It looks like March 5th. and this is stock that has just gone parabolic. And PanW is the biggest cybersecurity. It's kind of turning over, kind of capitulating, putting in a nice little shelf up here at 340. They've got their earnings on February 20th. The MACD's kind of come down. The stock hasn't come down, though. The MACD's been going down. The RSI's been going down. Hasn't affected the price. It's just kind of capitulating up there. It's putting in a shelf. So I would completely expect Fortinet to be a good one. Here is a great analysis of the company from Fortinet. Don't wait until the cybersecurity leader regains its all-time highs. And so for this particular analyst on Seeking Alpha thinks it's going to go to high. So Chris, I don't think you're going to miss out from any cybersecurity stock. Fortinet, it's going to be all about the guidance. Can they guide higher? I think you're fine. Next one from the private Facebook group, and I'll keep the name a little bit. Sean posted. Name retracted for privacy because the private Facebook group is a private Facebook group. If you're interested in the private Facebook group, up here on the link tree, it's the Facebook logo. Just click on it, answer who's the host of Daily Stock Pick, and you get into the group. You have to agree to the group rules. I kind of do run it. There's a few moderators in there. If you get out of line, I'm booting you. It's kind of, listen, just be a good human. Don't make fun of people. Don't throw up there some affiliate crap. Create your own group if you want to sell something. But yeah, let's see. I'm hoping to get your thoughts and opinion on the best strategy in regards to a couple of stocks that have been negative since 2021. I'm seeing no light at the end of the tunnel with them. Understand, that's the key line. Sean says, I'm seeing no light at the end of the tunnel. First one, SE. So down 17,000 on SE. Let's see. I don't know the percentage, so I do say the dollar amount, but you're down 17,000. C Limited, I've said it before. This is the range. If you want to sell this one, I think you're above the mid-range on this one. Are you going to regret it? Maybe you get a gap fill. But if we go over here to FinViz and we look at SC, I can tell you, I know for a fact, yeah, PE of 36, forward PE of 48. It's super expensive. It is 53% down. You're not getting back to these 88 levels. Not with that PE. It's an internet retail. Get out. I will tell you that. Get out of this one. Now, Docu, little bit of a different story on Docu. I personally do own Docu. This is DocuSign. Now, I've said it before. I bought Docu up here at 62. It has just crashed. Algorithm has you out. I put in a small position. Not much. I'll tell you right now how much I bought in Docu. We'll go over here to look at my portfolio. I got to do my Face ID. It had a golden cross. I bought it at the high, and the reason I bought it at the high is because there's rumors that it is going to be taken private. And that's the key is if you think this one will be taken private, I think you can stay in it. I bought $5,000 worth Docu. I bought 100 shares. And I bought, let's see, Docu, I bought at tax lots. Let me look real quick. I bought at $62.10 a share. I'm down 7%. Am I getting out? No, I'm going to buy more. And the reason is because I do think that this one, it is expensive. Understand the valuation is what will keep you out of this. I said that C Limited was expensive. The PE on this is 230. Now the forward PE is 19. So it's, as long as they continue earnings, that's where the earnings come into play. Understand it is still expensive. 69 is the 52-week range. The average target price is $60. This is, of the three, this is the one that I would say, hey, you might have a chance of gaining some of your money back, but I don't know that I'd probably just, sell a portion of this and take the loss because the money can go back in. The third one that he asked about that he's down 15,000 on is Upstart. And I posted last week that the big short guys, and I agree with them. Upstart has been one that has said, hey, we have AI loan process. The reason it took this dip is because their AI loan process was absolute junk. They said they've redone it, but they've got a ton of loans on the book that they can't sell. This one's just a matter of time before it explodes on the downside. There's a huge short interest. I don't believe in this company. I don't think you're going to get your money back. So I would take this money, I would sell it, I would take the loss. Look at the forward PE on Upstart. The forward PE is 308. They don't even expect to get back to the profitability that they had. They're losing $253 million. Higher for longer affects these guys. Don't think that you're going to get this one. It's 41% short. 41% of the shares are shorted. You could get a short squeeze. This one could go back to its all-time highs. I just don't think it's worthwhile. He asked, do I take the position that I'm in, take the loss, or wait for something else? I wanted to show you what I responded to him because I put in a long one, these SBUX on Monday. I told him about my experience in 2022, taking $250,000 in tax losses and just reallocating to places that fit. And the other thing, and again, I pointed out that the key to his play was I see no light at the end of the tunnel. If you've got losses and you play this game where you just hang on to your losses and you think, oh my God, I just got to make it back. We are all in that position. We are all in a way, we want to hang on to our losses. We don't want to admit defeat. We don't want to, this is the psychology of trading. But I would turn this around, and this is what I do with myself sometimes. And I said this with Sedge. Sedge was one where I was down like 50%, and I said, I do think that this one has an opportunity to pop back. The reality of Sedge was it didn't have an opportunity to come back. So I kept, hoping and praying. It's not a strategy. Turn it around. So if you're down, $5,000, $6,000, $10,000 in a position, turn it around. And say, if I were up $5,000 or $10,000, would I get out of this stock? If the answer is yes, don't think that you're getting your money back. Because if you're willing to take that profit, you're saying there's downside in this stock. That's the way you need to look at the losses that you're taking. That's my guidance on this one. Take it, just move it. Take the losses. The good news is if you're in a brokerage, you can write it off. It's harder to take in a retirement account. It is much harder to take in a retirement account because there's nothing to write off. You have to admit defeat. But the key point is, where's my money going to work for me? If it's long-term and you're down this much, you've got to identify why you're down that much in a long-term stock. Something like Devon. If you thought energy was going to continue to run and you're in Devon and you've just continued to lose, you've got to identify, hey, maybe energy isn't the sector. Maybe I should get into a sector that works. Let me move some money into an ETF while I figure out something. So there's the Daily Stock Pick newsletter. Let's go over some of the scans. First one is one that's currently running, and I would expect it to continue to run. It's up 4% at 692. I think you're getting over 700. This is NVIDIA. We have another cross-up on the MACD, another bullish signal. You are at 84 on the RSI. If you don't have a position in NVIDIA, I would get into NVIDIA. I would just buy it. Don't worry about the valuation. The valuation will come down because they will report an incredible earnings quarter in next week. It'll be fine. FBCG, this is blue chip growth. This is the blue chip growth from Fidelity. I just bought this for my dad. Why did I buy it? Even though it's at all-time highs, I just bought it because you just got to get into it. Something like this is not meant to be traded. We have another bullish MACD cross-up. It is high. If we see that pullback, I will just buy more. VOO. We got a cross-up on VOO and SPY, by the way. VOO is in the core portfolio. This is another cross-up. The MACD isn't as high as it's been in the past. The RSI is trending a little bit down. You're down 0.32. This just tracks the S&P. Do not expect this one to run. It is something that you buy and you hold. You dollar cost average your way in. Uber. Uber, I bought down here. I told you MACD crossing up. I bought way back here. I've doubled down on this one. I've bought, in the 40s. It's at 68. It's got another MACD cross up. RSI is at 70. They have earnings coming up tomorrow after the bell. Tomorrow. No, February 7th, Wednesday pre-market. I thought it was tomorrow. But it's February 7th pre-market. If you want to get into this one, I don't think that it's too late. They should have some pretty positive earnings. I think they're killing it on advertising. Palantir, we talked about Palantir being today's earnings after the bell. This one is down at $17.93. Remember, it was up 4%. I don't know if some news came out on it while I've been on here, but it's down. Change is not available. Earnings report today, post-market, Palantir, cross up, 1702. You're at $16.89. I may buy some of this for, I'm in at 20, I think $18 is my average price on this one. I don't own much. Full disclosure, I do not own much. Roblox has earnings. It is in the core portfolio. It is back under 40. It is back under 40. Did we just have some type of market reaction? Let me go to Seeking Alpha and see the ISM non-farm payrolls, 53 versus 52. Did that push the market down? I'm trying to see in Dow Jones. Yeah, it pushed the market down a little bit. We're seeing a little bit of a pullback in the market. I do think that we wind up up. The NASDAQ in particular, probably, you look at Tesla at 180. Roblox is under 40. We have a cross up here at $40.66. You are trading at $39.16. I think before their earnings, you get into this. I think they have some type of pop based on users. I think that it's pre-market, February 7th. So it's Wednesday before the bell. Another one that I own personally is Snap. Snap and Pins both report this week. Snap has a cross up here at $16.91. You're trading at $16.71. The MACD was super high. What happened as it came down? Well, we're seeing this capitulation. I mean, you're seeing this move kind of here. I don't think it's right about 16. It's putting in a shelf. What's happening? You're seeing the RSI move down. During this period, the RSI has moved down. During this period, you're seeing the MACD move down. It's getting ready for another pop. In my mind, I think you're getting ready for another pop. Are you buying at 16? The problem that you're going to have with Snap is the valuation. Now, they have some incredible AI, and it's some incredible new filters. If you've got teenagers in the house, they probably know about this. They throw in, they see a friend use a filter. They want to use the filter. Oh, it's part of Snap's premium service. Well, then you got to pay per month for this premium service, premium AI. So I think Snap winds up getting it. I think they're doing killing on advertising. That's what Meta made their money on. Snap is one that crossed up there. I do own Snap. I also own Snow. Snowflake is one that has a cross up here. And this one's been on a run. 197 was the buy-in. I've said it before, and I'll say it again. This one trades between 150 and 200. Right now, you're at the upper end of the Bollinger Bands. I probably would not get into this one at this price, but their earnings are coming up February 26th. If for some reason this is the start of a breakout like we had back here in May 2021, if this is the start of something of that sort, then it probably is just, hey, wait for a better price point. But Snowflake AI, I think they're killing it. McDonald's earnings, they came in line like we talked about. They have a cross up here. I would just wait for it. I wouldn't necessarily get in at this point. 297 was the buy-in here. I think anything under 300, you're fine. There's a lot more. ARCG. ARCG is one. This is up. ARCG is, you're seeing 29.15 right above that 200-day. I think you're using the 200-day as support. This one, the algorithm loses you 27% versus buying and holding loses you 40%. At some point in time, genomics becomes the important part of this economy. And you're seeing how far this one has come. You're under the 200-day. You're under the 50-day. You're under the 9-day. You're under there. I wouldn't time it. I would wait for this this weekly to start moving a little bit more before you get into something like ARCG. I know nothing about genomics, so I want the IBB. I want ARCG. I want something of that sort. The trading desk. This is one that I've been invested in before. I got out of. I haven't been back in it. The algorithm crosses up 69.96. You're trading at 66. If you look at the long term of this one, I do like this one for advertising. And this is the tough part. I think the 200-day on this weekly provides support at $55, but the valuation is very high, so be cautious. That was put in back here when it was trading at at 70. And I saw it was up here and it started moving down. But I do think that it provides support. You can see that on the weekly that we're right at the 200-day. And the 200-day is at 64. You're trading at 66. So the trading, just understand their earnings are coming out February 12th. And the trading desk, the valuation is crazy. Even its forward PE is 48. Its PE is 221. I would rather see you in Snap than in this one. Its price to sales is 18. If we look at a similar one, Snap's price to sales is 6. So I'd rather see you in Snap if you're looking at that one. I'll have a ton more. There's a couple of levered ETFs, SPXL, which is the long S&P, FNGU, which is 3 times FANG, FAZ, and UPRO. So those are the two sectors that crossed up. And I will say sectors, but one of them is not necessarily a sector. XLC. This is communication services. This has just been a monster. XLC got a cross up here. Let's see. XLC. This is just another run, another move in the current run. But 73 was the buy-in. You're at 78. The other sector, the other spider sector that got a cross up that's interesting to look at is XLG. We talk about the S&P 500 all the time. This is the top 50 in the S&P. Now, here at 37, great buy. You're at 40. I mean, we talked about how this one has just run up as an ETF. It's getting another MACD cross up. So solid. This is the top 50. If you think the top 50 stocks are going to move, this is the ETF to buy. So, okay, let's talk about TrendSpider. If you are in the market for TrendSpider, if you like my algorithm, if you like the buy and sell triggers like it shows, if you want to follow charting, here's TrendSpider. They have a great 7-day offer. Fee covers market data and infrastructure. Cancel anytime. Enjoy it. $29. Then it's $149 per month. If you want to sign up for the monthly, you can save 13%, $129 per month. This one is half that price, $74.40 a month. You save 50%. And that's for the year. So you have to prepay for the year. But if you want to just try it for 7 days, email me once you sign up. I'll send you my algorithm. I'll send you everything to import into TrendSpider. But yeah, this is the charting program that I use. It includes my algorithm, my watch lists, and everything that you need that you just saw me go over. Seeking Alpha Premium. You guys see how I use Seeking Alpha. The articles that I get out of Seeking Alpha. The Seeking Alpha Premium service at $189. Fantastic service. Alpha Picks. I showed you Alpha Picks with the 4 categories that you get. Subscribe now. At some point today, it should go to $89. I haven't gotten an email. Well, I don't know if I got an email since I've been on here, but you get 97% performance versus the S&P 3105. Most recent pick is Twilio. They just took Technoglass out. Meta, they go over Powell. They go over a lot. Exxon removed from the AP4 portfolio. I still have Exxon in the core portfolio, but I am taking Devon out. If you want more information on that, just let me know. The newsletter. Oh, sign up for Webull. Webull's the other one. I love that Webull app. Sign up for Webull, get free stocks. Use this link to sign up for Webull. And then the newsletter. Newsletter is free. Get it in your email for free. Any of these links bring you to all the socials. Any link on here. If you make money, I don't ask for, I don't charge a lot for payments and stuff. If you're in SMCI and I got you into SMCI, if I got you into NVIDIA, if I got you into any of the flyers and you made money, just say a thank you. $5, $10, whatever you want. I got my Venmo, PayPal, Cash App down here. So you can sign up for Venmo or Sign up for Venmo or PayPal. On the page, you get like $10. I get $10 as well, something like that. So yeah, any questions, hit me up. My email is right over here, dailystockpay3@gmail.com. I will talk to you guys tomorrow. See you, bye. Okay. Support my retirement, my family. Savvy Trader doesn't lift ELF for Tuesday after the bell. I think because it's a small cap. Let's see. Earnings. Let's look at the earnings. Yeah, this isn't all the earnings. I mean, there's a lot more. Seeking Alpha. See the earnings calendar. So if we go after the bell tomorrow, we're going to do this. When is Alpha reporting? I use TrendSpider usually has the best way for me to look. It is February 6th, post-market. February 6th. Stop! I don't see it on here either. Let's see. ELF. Stop. Where is ELF on this? There it is. Earnings watch. February 6th. Tuesday, February 6th. ELF. I don't know why the others don't list it. Probably not big enough. $9 billion company should be big enough, but maybe just not big enough for them to have it on their radar. Yeah, I don't see it. Fortinet's the big one. Let's see. Lunar. Intuitive. Stop. No crying. Is it what? I don't understand you. I'm not gonna sit there. You totally can get under that blanket. God, look at this one. 65-minute algo, I think, works really well on this one, if I remember correctly. No, loses you 37%. Does have you in at 369. That run up there was good. NVDX. What's NVDX? Oh, that's the 2 times long one. I'd rather just invest in NVIDIA, honestly. I'm going to add more. I'd like to get more under 600, but I mean, look at SMCI. It's up at 620. God, I should have added more. Yeah. Have I mentioned SMCI before? So, earnings calendar. NVIDIA 4D molecule jumped 97%. FDMT. 4D molecule therapy. Oh, look at that gap. Holy crap. Wow, this is, let's see, $1.5 billion company. They're losing $95 million. Target price $33. They just shot past 35. It's got some decent coverage. God, look at that one. Let's see what Seeking Alpha says about this one. Ooh, they've had it as a buy, strong buy. This guy said buy on January 25th. Editor's pick. Huh. That's an interesting one. Who do you think benefits the most from the software when it turns over? Microsoft? Which software? Larry. Thank you. I appreciate it. Yeah, I like the tips most because then I know you made money. That's all it ever is. And Brandon, who do you think benefits the most from the software when it turns over? Microsoft? What software? From AI? The AI stuff? I'm not, understand AI is so early and it's not software per se. Microsoft right now is the number one that's monetizing the software. And guys, 1019, I gotta go. Okay, I'll pontificate on this. Microsoft is currently monetizing the software with their Copilot. Google is currently monetizing the software with Bard. There's not a whole hell of a lot of monetization that currently makes sense. Even Bard doesn't make sense for Google. And that's why you're seeing Google fall so much, is because the average search, and I do think Google at 146 is a buy to fill this gap up here to 150. 152. So I don't think that there's any problem in buying Google at 146. I may buy more, in fact, myself. But Google has a problem with their current search. If you go on Google and search, it costs you tenths of pennies in energy to actually search something. If you go to Bard, the power that's currently in there, it costs Google like $1 for that type of search. The other thing is that other AI companies like ChatGPT, like Bing using ChatGPT, and soon Apple, and soon DuckDuckGo, and soon other search engines, you could create a search engine off a large language model and have it, present something as good, if not better than Google without ads. So taking that away from Google, that's where the risk is with Google. Does Google get it right and at least keep their dominance in some type of ad industry? And then you've got Amazon taking ads away from Google because people are going onto Amazon. You've got the trading desk taking away Google's streaming ad dollars. So Google is at risk. I don't think it's the biggest play like it was last year. I thought Google was the biggest play last year, and I bought a bunch under 100. Pretty happy with that, but I do think there's a risk there. As far as the software goes, in my mind, I don't think that there's anybody out there identified who's going to benefit more than Microsoft. I think Microsoft will add at least $1 trillion to their market cap over the next several years. I think they'll go from a $3 trillion company to a $4 trillion company very fast. I think they're set up the best, the most opportunistic. So that's the one that I would bet on. But ARM is another one, because remember, all those chips are based on the ARM platform. So they have to pay a licensing fee to ARM. So yeah, I think DuckDuckGo, listen, I don't know how they make money. Let's see. How does DuckDuckGo make money? It's a myth that search engines need to track you to make money. We make our money from private ads on our search engine. On most other search engines, ads are based on profiles combined. Yeah, so they still present ads, sponsored links that appear adjacent to search results. Viewing ads is privacy protected by DuckDuckGo, and most ad clicks are managed by Microsoft's ad network. Yeah, with a user profile. If you don't think that they're not drilling down to you from a user perspective, but they're drilling down to you based on, they're going to have AI in there and say, hey, somebody on this street buys Atlanta United tickets. Let's promote Atlanta United. So I got bounced out of my buy on SMCI on Friday, Scott. I didn't buy it. I got bounced out. Wish I would have bought more under 600. I'll have an opportunity to buy it under 600 again, I think. It's at 622. Here. If we look at the 5-minute chart, I've talked about trading on, buying something like this on a 5-minute. And see, okay, let me explain to you. This is the range I saw in the opening today to support a move higher. This is where I posted it, okay, right here. What I saw was you shot up through here. You came back. Look at that. 1, 2, 3 times it touched this level. What did it do on this? It bounced up here to 580. It bounced back to 570. It touched it once. So you've got 1, 2, 3, 4 times before I said this is the move. And then it just bounced off another twice during this day. I got lucky. Honest to God, I got lucky. But the volume level was there. It's making these volume levels at about 580 right now. If we move this even closer, let's see where people are buying. If we move this to the high right here, the majority of people from this point, which was Friday at 9:45, the majority of people are still holding down here. But look at that little shelf building. We're building a shelf here at 620. If we break down there, we go down to 600. If we break down from there, we get at 580. So I'm not moving necessarily from my 580 price point because you can see, and this is a 5-minute. Understand, this is a 5-minute chart. This is how you trade. You get confirmation and you buy here at 590 because it's over the 9-day. And it touched the 9-day here. You could have gotten out at 616 rather than wait for it to go up. You could buy back in at 625 and, maybe make a couple of dollars here. But right now the Bollinger Bands are super high, expanded. They were super tight going through here. You were going to make a move and you gapped up. So, there's this gap here between 579 and 586. If you don't touch the bottom of this gap today, then this creates the shelf at 620. And that's the next shelf to trade off of. So, wow, XLY is down 2%. Oh, that's because Tesla's down 4%. God, I'm glad I dumped that XLY. where did I dump XLY? I think it was at yeah, it was in December up at this 180 price. I'm not too concerned with XLY. This is how you protect yourself against that Tesla stuff. And Tesla, there's no confirmation of Tesla, dropping this slide. Yes, you made a nice move, of 10% the other couple of days from 180 back up to try and cover this gap at 196. It didn't cover the gap. The gap is all the way to 206. So you've still got this gap fill in play, but you just made a move down. So Scott, kudos and high five, man. It never triggered my buy on Friday. I think my buy was 560. And I don't feel like watching charts all day. Yes, I missed out on it. Oh, well. But I've got a big enough position. I'm okay. I've got 3 positions. Well, I've got in the past week or two, I think probably last week, I think I bought 3 positions in SMCI. Man, Fidelity keeps changing their freaking app. What are they doing? Now you got the markets way down there. Ugh. Why aren't you telling me the freaking gains? Oh God, I hate Fidelity. Caveat that I hate the Fidelity app. And it's been told very clearly to me that Fidelity's app is not 100% what they're focused on. And the app can't be something to everybody. So, remember, Fidelity is a full-fledged brokerage firm, unlike Webull. So, God, my SMCI position. Hold on, I'm going to go to all positions. Yeah, I've got some in my parents. I've probably got somewhere in the neighborhood of, I would say, close to 110, 120 shares between the 3 positions. My first position is up 134%. My second position from last week is up a total of 20% in my retirement account. So, okay, to 195. I love Apple. Understand, I am not, and this is part of the, this is part the chart that I wrote for the contributing article with my weekly stock pick, but yeah, I did get an email from Alpha Picks that Technoglass removed. So I did get that. Okay. I am out of here. I'm going to go do the newsletter. I'll talk to you guys tomorrow. See you. Bye.